All right, guys. I want to talk a little bit about where I see the market right now. And I want to talk about BitBonds 21 and Nakamoto. So what do I mean by BitBonds? Okay, let's talk about BitBonds. One of the biggest stories of 2024, I thought the biggest story of 2024 was going to be the Bitcoin ETF, but it really was kind of the Bitcoin ETF and MicroStrategy. MicroStrategy, outperformed in 2024, but it really took an enormous amount of capital with it, and I didn't expect this. I expected that most of that capital would go to IBIT. And I thought it was going to be very bad for MicroStrategy back in January of 2024. But as long as you're long Bitcoin, you don't really need to have an opinion on this. Now, as it turns out, MicroStrategy was, one of the big variables in terms of driving institutional adoption for Bitcoin. And, back around January of last year, I kind of made this sort of prediction that we'd see a very large amount of financialization that would happen in the Bitcoin space. And so what do I mean by financialization? I mean that we'd see a product, that Bitcoin products would come out by Wall Street, and people would find new innovative ways to package Bitcoin to appeal to financial players. And I kind of made this video, which I think was really good, about sort of the history of financialization, which started with mortgages, CMOs, collateralized mortgage obligations, supplanting just pools of Ginnie Mae, Freddie Mac, and Fannie Mae. And we had CMOs, and we had the financialization of real estate with REITs by Sam Zell and Equity Office. And then it's just sort of this trend, right? That everything gets financialized, packaged, and we're sort of seeing that. We did start seeing that play out in with these ETFs, and we saw. We're now seeing things like MSTU, MSTX, leveraged, 2x multiplier on MSTR, MSTY, high income plays on MSTR. But I definitely think there's still quite a bit left in this sort of financialization. Most would agree, Justin. Yeah, I don't have that tweet really handy, but we still have quite a bit left, I think, in the financialization picture. We're nowhere done with it. And, while everybody sort of thinks, well, MSTR has won, this is the end, we're going to have all these, nobody can keep touch MSTR. We've actually seen kind of the spreading of stuff. So MSTY is not an MSTR. It's not a MicroStrategy, a strategy product. It's a product. It's a derivative that was created on top of MicroStrategy. And we saw Metaplanet, the copycat in Japan. That did really well. And right now we're seeing, two other ones that are coming to light. And the most interesting of those is 21, right? So 21 is three major financial backers. We have Tether, which is now earning more money than Goldman Sachs, okay? And with, 50 employees, they're earning more than Goldman Sachs. So Tether is an absolute force, right? And you have Cantor, which owns part of Tether, right? We have Howard Lutnick, who's very close to the Trump administration and owns part of Tether. So we have Tether on the, on the really the crypto side, and then we have Cantor on the Wall Street side. And as a bond trader, I dealt with Cantor all the time back in the 80s and 90s. It was the reference for interest rate swaps, and you'd always go to Cantor. So, and then the third player in that is SoftBank, which is a giant in the tech space, just really good at raising money. Really, has made a few errors, with WeWork in particular, but those three are super deep pocketed players, and those guys are backing this 21. So, I think 21, number one, it's going to start out with a lot of Bitcoin. It's going to start out with 42,000 Bitcoin. So we're going to start out with $4.5 billion of capital. But, having Tether behind it, having SoftBank behind it, they're going to be able to raise a lot of money. And so I think there's going to be a lot of innovation coming out of that new company. So just like we saw, MicroStrategy innovate and, first started with this convertible bonds, then doing these, perpetual preferreds, and, Strife now, right? So there's been a lot of innovation from MicroStrategy. I think that's going to continue and expand with 21. And one of the structures that I'm the most, wow, so my mic's pretty bad, huh? Let's see, let me just test my mic. It says it should work. I don't know why it's not. I could go to a different mic. Let me try my different mic. So let me just do a different mic. I don't know if it's better. Okay, so yeah, so the instrument that I'm the most interested in is this BitBond, and the BitBond works like this from the user. Hey Tom, you want to jump on? I'll give you an invite if you want. The BitBond works like this. There's a loose wire. Pull it out and pull it in. Wait a second. Pull it out and pull it back in, loose wire. Okay. Let me see if I can figure this thing out. Okay. Audio. Let me try the two. Test. Is that better or no? Okay. All right. I'm just gonna go with this. All right, Tom Young. I'm gonna add Tom Young to this. 1 second. Let me see if I can even add him here. Invite guests. Okay. Here. Try that link, Tom. Anyways, so the BitBond works like this. You start out by, let's just say we do it for $1 million. Okay. $1 million, normal bond, normal kind of corporate bond's going to pay, let's say 6% per year. Okay. So let's say it's a 10-year bond, it pays 6%. Well, instead of paying 6%, this bond will only pay you 1%. People are not liking this mic. Okay, let me see. All right, let me try this. Okay. Better or not? Audio output. Now that seems to be pretty good, I think. Okay. All right. Okay. So now we have this. It's just fuck. All right. Block list. Okay. Blocking this guy. So now we have this bond that pays, instead of paying 6%, you are now paying you're getting 1% per year. But then at the end, you're going to get all this, you're going to be guaranteed to make at the very end 6%. So we're going to kind of catch up to your interest payments at the end of 10 years. And now, why would you want to do that? Well, you want to do that because you're guaranteed the 6%, but you could be making quite a bit more, because what you get is you get the better of 6% or 5% return, 5% of the return on your Bitcoin. Okay. So basically it's a 90-10 rule. 90% of this, of the money raised is going to go to a fixed income treasury purchase, and 10% is going to go to Bitcoin. Huh. Wow. I don't know what's wrong with this. Oh, you know what I think it is? I think I'm downloading something. I don't know. Maybe I'll try a little later, because I seem to have some audio issues here. If DM me the link, and okay, I'll DM you the link. I don't know. I apologize for my audio. Here, let me DM you the link. Okay, Tom, I sent you the link. I don't know what the fuck happened with my audio. Now I'm saying, people are saying good audio. It's a wireless device. Audio's good. Okay, good. All right. So I sent Tom a link. So basically, this BitBond is a structure where you're getting a lower income, a lower interest amount in the bond, and you're getting a guaranteed. You're guaranteed to make 6%. Let's just say, over the 10 years, you're guaranteed to make 6%. A bad Excel argument. Let me. All right. Maybe that's better. Okay. Better? No? All right. Whatever. Okay. So a bit bond is you're basically guaranteed, you're guaranteed the interest rate, the 6%, but you could make substantially more. So in the case of something like move any wireless to, okay, backstage. Where are you, backstage? Huh. I'm having a lot. This is not my normal. Audio's good. Okay, good. Where are you, backstage? Interfere. Oh, okay, I see, Tom. Here we go. Yeah, they just redid the restream. How's it going, Tom?
Hey, Fred, how you doing? Yeah,
okay.
There's a on the receiving end. There's a little clicking. It's not that bad. You get you know. I don't hear it too much now, but
okay.
Anyway.
So I just wanted to explain to people. Do you understand these BitBonds?
Yeah. So actually, it's this morning I was talking about it with I was going through it and studying it, and basically you're using, like, let's think of a 95-5 structure. I put 95 in treasuries, the 5% on the treasuries get back to par, and I take the 5% and I get all the upside for a period. So I do a 5-year bond. I sell it for $1,000. I take $50 of that proceeds and I buy Bitcoin with it, and you get all the upside. Now, the issuer gets to keep the Bitcoin at the end of the term.
They're splitting, right? So
well, you could set up however you want, but
right.
I mean, but what you're doing is you're selling a call option in the form of a bond with no downside, because downside is protected. Now, you could structure any mix you want, but the most conservative would be a 95-5 split. And if Bitcoin goes up 5x in 5 years, I know that's 5x 25%. So that 5% becomes 25, and now you're at 25 on the whole thing. So you get about 120%. Pretty good return. The thing I was looking at when I was studying it is, why couldn't you do this with other instruments besides Bitcoin? Because what is it unique about Bitcoin in it? And really what the issue is, it's a paradigm that it's an asymmetric return, limited supply, highly portable, divisible.
Well, here's what's special about Bitcoin. It has the potential to 10x over a decade, right?
Yeah.
That's the difference, right? I mean, you could do
no other asset that has that paradigm.
Right. So basically what you're doing is you are basically saying, yeah, we believe that, and I think this will be extremely attractive to a lot of conservative people, right? Because people are like, I like this idea of Bitcoin. I'm willing to risk a little bit, but can you give me no downside? If you say, I can guarantee you 6% a year for 10 years, and I'll give you, if Bitcoin does go to 1 million, you know what? That 6% is going to 20%. People are going to be like, whoa, I like that. That sounds good.
So I did. So there's a tremendous amount of capital that is not going to buy Bitcoin directly. One is they don't want to deal with the custody issues. The other one is they're just not, they're not set up to do it. So pension funds, private wealth funds, home offices, insurance companies, a lot of them are going to be interested in this. Now, take it one step further. The 95-5 is the most conservative, given the treasuries are about 5%, right?
Mm-hmm.
That says Bitcoin could go to 0 and I still get the par. But you could say you could say in the prospectus, we don't think that Bitcoin's going to go below 50% of its current value. We could see a drop. It's more likely to go up. That's why you're buying this. So we're going to go 90-10. So worst case, the underlying treasuries at 90 go to 95, and the Bitcoin compresses in value by 50%, and you're back to par. Now, a 90-10 is a much more aggressive approach. And I think you're going to see a lot of people structure these kind of arrangements. Secondly, you could, as part of the underwriting, take an even more aggressive position and buy some hedges that would protect the downside for the bond.
But you could, here's the thing, you can completely hedge the entire thing, right? So somebody could say, here's the thing, take a company that doesn't want to have anything to do with Bitcoin, nothing. I don't know, the Republic of Italy, you know what I mean?
Yeah.
They could say, okay, we want to issue some bonds, right? We don't want to have anything to do with Bitcoin whatsoever. We just want to issue these bonds at the lowest possible yield. Well, I can go and I can issue them now, but they're going to have difficulty placing some of these bonds. But, if they said, listen, we're going to allow you to issue bonds at 1%, and we're going to completely swap this whole thing out for you. We're going to swap all the cash flows. So you have no risk. You have no Bitcoin stuff. And we're going to take, meaning a financial counterparty, will take all the upside on that, from you on the issuance, right? And if you do these and I've done these kind of deals at Solomon, right, where I've swapped out the entire cash flows with the counterparty. So the counterparty is just the issuer, like Orange County did it.
Right.
You know what I mean? Now, Orange County had no idea what the financialization of what we're doing. They're just swapping it so that they're going to get LIBOR plus 10 basis points or something. You see what I'm saying? So they're just swapping it into some very low interest rate. And that's super attractive to the issuer, right? So my point is, I think this is a capital markets play. And I think something like 21, or it could have been MSTR, it could be Goldman Sachs, that they were prohibited from doing this, until recently, right? But I think there's going to be a lot of people that are going to be willing to facilitate these kind of transactions. And I think these transactions are going to be incredibly popular. And it's just,
the buyer of the bond is interfacing totally in fiat.
Mm-hmm.
The terms of the fiat payouts are tied to the performance of Bitcoin, but there's no Bitcoin exchanged.
There's no Bitcoin exchange. They're just getting a dollar amount.
Right. So if I'm JP Morgan, I can issue these at unlimited scale. So it's a demand driven product. I then go buy the Bitcoin and I hedge my position because I'm giving them Bitcoin exposure. I settle in fiat at the end of a 5-year bond.
Right.
Now I'm sitting here and I own the Bitcoin.
Right.
And 5% doesn't sound like a lot on a $100 million investment. Okay, I'm getting 5 million. Hey, it's I want to say
free money.
It's free Bitcoin.
It's free Bitcoin.
Why wouldn't these firms do that? And I think the issue now is the issuing party has to be credit worthy, or no one's going to do it. So it couldn't be Fred and Tom's bond offering. They're just not going to buy that. But if JP Morgan gets behind it, forget about it.
Also, we're thinking in the U.S. You know who I did a lot of these things with in the past? Japanese entities.
Yeah.
Okay, so I did a ton of these swap deals with Japanese, like the Japanese post office issues a bond. Okay. Now you may not have think the Japanese post office, how big the Japanese post office is an enormous thing. It's about the same size as JP Morgan. You know what I mean? It's an enormous entity, the Japanese. That's kind of where the Japanese, women save their money, in the Japanese post office, right? So the Japanese post office, could buy all of there's so many issuers, right? So you have an issuer, that issuer is not known to America, but it's known to Japan, right?
Yeah.
So and there's all these rules saying we can only buy from a Japanese issuer if you're a Japanese, they can't buy necessarily from a US. So they'll just buy from a Japanese issuer, right? So so I think this thing could play out really, really well, right? In terms of the financialization of these fixed income instruments, right? They're fixed income with a little twist, right? And I think just this is an idea that I think could really push Bitcoin by another an order of magnitude, right? Because I think the thing is, what I didn't realize is how much appeal MicroStrategy would have. I thought the ETFs would have far bigger, right? This time in January or a year and a half ago, I thought, okay, for sure these ETFs are going to just eat MicroStrategy's lunch. But actually, there was a lot of demand for the MicroStrategy, the stock, thing, and a lot of people resisted and still haven't, listed the ETFs, Merrill Lynch in particular, right? So, but I think as we look at these bonds and these other things, I think that there could be several other MicroStrategy like sized buyers out there, in the next year or two.
Yeah, I mean, just think of the sovereign wealth funds. Think of pensions. Think of a lot of home offices. They simply don't want to deal with the complexities of buying Bitcoin. They're just not going to do it. I know a lot of people who are in the Bitcoin community. They say just buy Bitcoin, just go do that. Understand that's not where the market, the big money is not going to touch Bitcoin directly, and they may not even want to buy the ETFs. They're perfectly comfortable buying a bond if that bond is properly structured and the counterparty on that bond is quote credit worthy. They're going to buy these things, and really what you're doing is you're just adding a little bit of Tabasco in the form of Bitcoin to these bonds and driving up the returns. Now, one of the issues, and again, I do, the public service, elected official stuff. The pension funds at the public pension funds, a lot of them, like California, Illinois, New Jersey, a few others, are woefully undercapitalized.
Yep.
And they are chasing returns, and they need to get above a 7 or 8% return in order to begin the capitalization of those funds.
Right.
They're going to be interested in this kind of stuff because it's again, I think it's a very creative product. I know there's a lot of doubters out there, but I would just say your thesis last year, and I think this is right, and I would take it one step further. All of the financial products that Wall Street has developed over the last 30 years to be as creative as possible, they're now going to add Bitcoin as an ingredient and rethink that stuff. Everything from mortgage-backed securities to bond writing. Think about a municipality that's issuing muni bonds. I issue a muni bond, our town, the town that I manage here, we have a tremendous bonding capacity, but we don't use it. Could we issue a 2-year bond using this BitBond structure where we just use our borrowing capacity? We don't need it. It's a zero cash flow kind of thing. We buy treasuries on the 95%. We give the upside on the others, and we settle at the end. But we own the Bitcoin for free. We start to capitalize our balance sheet 2 years out.
Yeah. Why wouldn't you do that?
Oh, I would do it. I'd have to convince my colleagues, and I'd have to convince regulators.
And as I say, nobody wants to be the first in the pool. But guess what? If Pennsylvania was doing this, you'd be like, oh, okay, well, Philly's doing it, so why can't New Jersey do it? If New York's doing it, New Jersey will do it, right? So I think this is a kind of a copycat thing. Somebody has to launch the first ones of these. They have to be successful. And then I think people are just going to they're going to copy paste. That's how this financial innovation works. You get one of these things and then somebody says, okay, I get it. I understand the formula. Let's copy the formula.
So where I'm exploring now is the hybrid approaches where, because I'm really interested in doing this from a municipality perspective. Could I issue a muni bond and add this BitBond structure into it that changes the cost of borrowing? And what I'm trying to tap into is our ability to issue muni bonds. So we might have a 75 or $100 million capacity, and we're only using 15 or 20 of it. Well, I want to use some of that capacity because it's idle, and try to create a better capitalization for our balance sheet. Now, again, I'll just tell you, when I talk about stuff like this at the local government level, people they think it's complete voodoo. There's only a few people in town that really even appreciate how we manage balance sheet mechanics for municipal finance. And try to explain it to voters, forget it. I start talking about it, and people, they just say, keep my taxes down. They don't really understand the details here. But it's very interesting. I see it's a fantastic hammer, and what I'm looking for are the nails. What are the nails in society that can be solved here? And chasing return for a lot of these funds that are sitting on single-digit returns, and they're seeing these crazy returns from Bitcoin, they're going to want to say, give me a little bit of that in my portfolio, but do it in a way where I'm not exposed.
Right. And I think that's the thing about, also is if you could get these things rated, like that would be if you can get these things so that they're guaranteed and rated, right? Those are the two things you need. You need a rating on the bond, and you need to have a reasonably good issuer of the bond. They wanted to do this with El Salvador, but honestly, I don't think there's that many people who want El Salvador's credit personally.
Yeah, Now, again, I'm thinking out of the box here, Fred. Think about mortgage-backed securities, credit default obligations, credit default swaps,
Yeah.
and now take this structure and add that into it. It makes I think we're gonna see some of that. I think it's
Well, there will, and we're going to see a swap market array. Right now, there's not a long dated forward market for Bitcoin, right? So you can't swap Bitcoin cash flow for fiat over a 10-year period. I don't believe that anybody is offering that product, right?
right.
But I think they will, right? I think they will. They've done it in every single thing, every single other market. These things always evolve, right? And I thought 30-year interest rate swaps would never happen, and they have them now. You know what I mean?
Yeah, yeah.
So the swap markets happen, and once you have swaps, you can hedge your risk over this entire period. So it's now any issuer can come in and with a financial counterpart like a JP Morgan or a Goldman Sachs or any of these people, they can do a capital markets transaction, and these things are very quick to do, right? You can do them. I mean, I was doing when I was at Solomon, I was doing 3 a week. I mean, literally doing 3 a week. Of these kind of Aussie yen deals and other kind of deals, right? But we did tons of these things, and we're just, the sales guy would just call up some Japanese entity that wanted to raise money, and we'd be like, okay, here's the formula. You guys ready to do it? Great. Sign the documentation. Great. We're gonna sell this to our sales force. Boom. Sells out in 2 hours. And that, this is the productization. I don't think people understand that there's this whole world of selling these products that exists, and it doesn't exist for Bitcoin yet, but I think it will very soon. So I don't think it's 2 years out. I think this stuff's happening, and I think that this 21 company is going to be a big player on this. That's I don't have any reason to believe that, but I just feel like, Cantor has been at the center of derivatives in the U.S. for as long as I've, older than me, right? Bernie Cantor, this idea of having these kind of, I always had the Cantor screen up, that was my main counterparty for swap trading, right?
Yeah.
Was Cantor. So to me, Cantor's been at the forefront of derivative trading. And then you have Tether, that's really tied into every single exchange on the planet, right?
With billion
and then SoftBank. What?
They just have huge cash flows, and they're
huge cash flows, but just huge ties to everything crypto, right? So
yeah,
I just think that you take these things together, and and you throw in SoftBank, and then Jack Mallers is a very charismatic spokesperson, right?
Yeah.
I mean, it really could be quite big. I mean, I don't think it's like a second tier player at this point. I think it's gonna be really big, really quick. And listen, if you were gonna launch this thing, when would you launch it? If you were Tether and you were Jack Mallers?
Right before Vegas.
Exactly. Right. Like, would it surprise you if they're like live and they've got their product and they're launching a new thing right at the trade show?
Well, I think even doing that and then announcing capital commitments for the product.
Right.
Let's put it this way. I think we're going to be in an all-time high situation when we show up at Vegas. I think I would not want to be short at that point, because you could see some crazy announcements happen like that.
Yeah, I mean, I just think there's going to be some crazy announcements at that trade show.
Yeah.
Right?
Yeah.
I think. But I think that, look, and the last thing I'd like to point out is David Bailey's thing, right?
Yeah.
So the more I look at that, the more I'm saying what they're going to do. Bailey is kind of funding a bunch of these kind of metaplanet type things in different jurisdictions. right? So what he's trying to say is, look, we're going to do Metaplanet in Brazil. We're going to do Metaplanet in Africa, right? We're going to do Metaplanet in Pakistan, okay? And, we're going to find a local issuer, a local stock, and we're going to seed it, right? And again, it's going to be something different. So we're not going to have 3 carbon copies of MicroStrategy. We're going to have different things, right? And I think, again, this is like a whole new kind of source of demand, right? So this thing could really sort of heat up. And those guys are also going to be wanting to announce in Vegas. So I think this Vegas thing could be really interesting from an announcement and Bitcoin price kind of perspective.
So I'm gonna research this for a little bit for my situation here in New Jersey to see what's possible. But I can see a situation where people are using their bonding capacity and selling these products, and then once they're set up, because a lot of them are zero coupon and zero cash flows until you get to the end,
Right.
You can then start to syndicate your position for immediate cash flows.
Right.
So as a municipality, if I don't need the cash flows here, I'll sit on it and I'll wait and I'll get that balloon payment benefit at the end. And then if I can build a Bitcoin position at the back end of a bond series, then I can do different things with that. But I may want to syndicate that ownership and maybe sell call options that cannot be exercised until after the bond term. And you can see some very interesting ways that handle very creative finance here. Now, it's complicated, but I'm going to say what was more complicated than credit default swaps that were put into another tower, and then they did credit default swaps on that, and CDOs 9 ways from Sunday. No one understood that, but the market bought it hook, line, and sinker.
Yeah.
And because they were making money, and it was crazy. This I could see this getting out of control, but at a minimum, in the short term, we're going to see.
Well, that's kind of why I think this is sort of changing my perception, right? So my perception of this stuff was we're going to have the power law kind of thing, and in fact, the power law sort of says we're going to have dampening,
right?
Not the power law, but this quantile regression stuff says, well, we had a bigger high and we went 3 standard deviations away in 2017. We kind of did 2.5 in 2020. So we should really expect more like 2. Connect the dots. You know what I mean, for this thing. So
Fred, on the power
that's
law,
what they're saying. But I'm sort of the opposite opinion. I think we might actually have a complete and utter blow off top to amazing valuation within maybe a year.
Here's why. Giovanni is an astrophysicist, right? So in astrophysics, there is a issue called the 3-body problem. Now, from studying the power law last year quite a bit, that there are 3 main variables in the power law. The first one is adoption, and the variable used is addresses. The next one is value, and that's USD price. And the third one is energy, and it's measured, the variable is hash rate. So when you get into and that dance has been working very well with very high correlations in log space. So when you look at that, now the issue is prospectively in the chaos theory, the problem
is that even a word, prospectively?
Prospectively, I think it is.
Okay, I don't think so.
Oh, maybe not.
Okay, I get it. It's fine.
You're more
it's a good word. I get it. I get what it means.
I just made up a new word, prospectively.
Yeah.
If I look at it into the future, when I introduced variables that were static coefficients for the first 15 years, and now they become variables, not coefficients, I introduce chaos into the 3-body problem, and it becomes unpredictable. Now, what I would say, now I've debated this with Giovanni. He disagrees. I have my opinion. I'm not going to argue the math with him. I understand the math, I'm an engineer. I'm not a mathematician. There's a difference, right? What I'm saying is when you introduce all this TradFi money, it changes things that were coefficients become variables, and we could see a blow off to the top, to the high side. You know, I'll give you variables that could change that would bring it down outside the power law below the minimum, and that would be regulatory changes. If all of a sudden there was a hostile regime and they made owning Bitcoin illegal, you're going to see the price drop tremendously, and only people who want to live in the dark spaces are going to have it. You know, think of all none of the TradFi money is going to touch Bitcoin if it's made illegal. Now, I don't think that's going to happen. I'm just saying there are things that could happen that would change the power.
Well, it might happen after we let's work through this scenario. Imagine Bitcoin goes to $1 million 12 months from now. Okay. And then it completely crashes, and it crashes for, by the way, you just went dark.
I don't know. I'm having video problems. I don't know if I need to, I'm on Wi-Fi, but I have very high speeds. I might switch to Ethernet direct. So I don't have this. I turned off my security camera.
Now you're back. But imagine this: Bitcoin goes to $1 million in the next 12 to 18 months. Okay, and then we have a complete crash from $1 million to 150,000.
Right.
Okay. And at this point, you know, a bunch of these things get wiped out for whatever reason, you know, and you get a bunch of people who, you know, made some really bad decisions and they get wiped out.
Right.
And they're, you know, some pensions, they get wiped out, whatever, you know. What's the regulatory response? We got to curb all this, you know.
Absolutely.
Right. We got to curb this craziness, right? It's exactly like 2008 all over again, right?
Yeah. Well, you mentioned in our conversation the other day about on this next leg up, peeling a bunch off and just saying, look, I'm gonna whatever the numbers are, you're gonna so you go to the Kelly criterion, right?
Yeah.
You said you're at around 70. You get to 90, you got to rebalance. You got to bring it back down. And
the question is whether you rebalance at fixed time intervals or just you rebalance when you hit 90, you know?
I think you set a threshold. Pick a threshold, 75 or 80, you rebalance. But I think that's an appropriate thing. I mean, we saw our friend Josh just pull the ripcord Friday night.
Yeah,
and I think it's great. I mean, I was pulling for him to hit 100 million before he did that, but I think he's going to jump back in with IBIT options, and he wants. I think maybe want to play with the 21 Capital. I'm trying to get him to commit. He won't say what he's going to do, but this is just a side portfolio for him, and he's been very profitable for it. So
yeah. Look, I think Josh is a trader. The other thing not to forget is Josh is a trader. Traders owe money at the end of the day, the year, for taxes, right? Listen, I've written some really big tax checks, and they're not fun to write, and
he owes 15.
What? Yeah, he owes 15 million, right?
Yeah.
Right. So he owes 15 million, and while if he does take some losses, he may not owe 15 million, but he did trade a lot last year, right? So he owes money off of last year. Now, whether he pays it or not, whether he fully paid it or not, or extended it or whatever, right? I don't know. But what I'm saying is all these things are tax issues that you don't have if you're purely hodling, right?
Yeah.
And
he shared with me some of his book outside a while ago. This thing he's been doing on X with MSTR options is just one thing he's doing. He's doing other things. Right. It didn't. Now that you said it, we just passed April 15th.
Right.
He could be like, shit, I just had to write a whole bunch of money here. I'm not playing this game anymore. And he sold just to get his position back and then recalibrate for the next thing. This is his view, whatever you think of it. It really doesn't matter. His view is it's going to 444,000.
Oh, I think he's probably right. Like I don't think look, I think he's not going to necessarily be right about it stops at 444.
Yeah.
Do I think we get there? Probably. But I don't know if we stop there like on a dime, like March 84,000 and then March 14th, 84,000. I think that was a one-off call.
But it was so epic.
It was epic. It was a very odd.
Because he didn't say 84 or thereabouts. He said
No.
on GDAX, on the Coinbase basics. He was very specific about that.
Yeah.
And he didn't say 84,002 cents. He said 84,000.00. And he got within $20 of it. And he said at 8 p.m. He didn't say at 6 p.m. or anytime during the trading day. Very, very. So anyway, if you're sitting there and you're thinking it's going to 444, there's a lot of ways to make a lot of money from 105 or 104, whatever it is today, to 444. Especially if you want to put yourself into some levered positions, you're going to make a shit ton of money. Even from this point forward, you're going to make a lot of money.
Well, listen, Tom, I'm going to have to hop, but thanks for hopping on, and hopefully we'll get our video and audio problems. Sorry, guys.
I'm going to rewire myself this afternoon. So
yeah, right. I don't know. Apparently my phone is too close to the mic.